So now let's talk about customer over and underpayments. This is a tricky one. And in fact, what I've noticed is that probably the number one issue that we get in Ask the Instructor and live Q&As and things like that are reconciliation um, related questions. Reconciliations are a big deal, and people run into the problems with them, which is totally understandable, by the way, because one of the things that was hardest for me to wrap my head around whenever I started learning QuickBooks was reconciliations. It is genuinely difficult. So the second one, though, immediately after that is dealing with balances from customers and vendors. And it's hard, right? It's tough to figure out sometimes because there are open transactions and closed transactions. There are little amounts that might come from this payment that are applied to like 2 or 3 or 4 different invoices. So it becomes this sort of like nest of just interconnected transactions after a while. And it can easily be overcomplicated. Um, so dealing with over underpayments just makes it even worse. So I want to show you a couple of things that happen with over underpayments. Now, and also how to enter them, because there is some confusion on that as well. Right here we have a customer, Amy's Bird Sanctuary, who owes us $239. I'm going to enter an overpayment. Now, the reason why I always suggest entering these manually before you download them is because it just gives you more control over how to deal with them. Because whenever you're entering something like this, say with Amy's Bird Sanctuary, I check off the transaction. Now, the first mistake people make is they check off the transaction, they look at the amount, and that's correct. They owe that amount of money, but they don't somewhere else on the transaction indicate that there was more money or less money. If there is more money or less money that's being taken in this payment, it needs to be recorded right here. You can't record it, especially if it's more money, you can't record it right here. So you got to put it in right here. So if we received an overpayment, it's really important for us to put in that full amount right here. Otherwise, QuickBooks is going to assume that we really did get the $239. But we actually, if we did get the 240, we need to tell QuickBooks that, right? Now, what's nice about this is that it does create a credit in a single dollar. Now, a lot of people expect for that to be a separate transaction, a credit memo, so to speak, right? But it doesn't create a credit memo. It just creates a payment that's $1 more. So later on, whenever you create another invoice, this payment can also be applied to that invoice. That's the kind of tricky thing about it. If they underpaid us, well, that's a lot easier. We'll just do that, and then QuickBooks knows to keep the rest of that dollar between the amount we got and the difference. Now, the question is, how do you deal with that dollar? It's a pretty complicated situation. So let's do both. I'm going to record one as an overpayment, one as an underpayment, so you can see all of the ins and outs, right? So we're going to do first the underpayment, $238, which means that they still owe us $1. So I'm going to save this. All right, so now we can see that they still owe us $1. Now, are we going to track them down for $1? We might, especially right now, but in a lot of cases you're not, and especially if it's for a smaller amount. So how do you deal with this leftover little dollar or quarter or penny or whatever it is? The easiest way to do it is with a credit memo. So I go over here to New, choose Credit Memo, pick out that customer's name, and usually what people will do is they'll create a product or service named write-offs. And so that's what I'm going to do. Write-offs, we'll put that in as a service. I'm going to put in no sales price because it's going to be different from one customer to another. The income account, you've got choices. Usually what people will do is they'll actually create an income account that will have a negative balance on the profit and loss report. So I'm just going to set one up really quick. I'm going to set up an income account that will be sales of product income. We'll call this write-offs from customers. All right, this is not taxable. Save and close that. All right, good. Now I'm going to give them a credit for $1. And then I'm not going to send it because they probably don't care about the dollar either. We'll save that. And so now that credit memo was automatically applied to the invoice. Basically, QuickBooks created what's called a $0 payment, where it combines the credit memo with the invoice right there for $1. Now, what did that do? Well, if I go over here to my profit and loss report, I would see the original income as a positive number, and then I would also see the write-offs from customers as a negative number. So that way, the net would be $238 for income. So that's how to deal with those situations. Now, when we're dealing with customers and underpayments, overpayments, underpayments are pretty easy. You just create a credit memo and write it off. With the overpayments, it's a little bit tougher though. I'm going to find another customer. I'm going to play around with Bill's Windsurf Shop. He owes us $85. If Bill's Windsurf Shop pays us $90, it's important for me to put in $90 right here. But that means that he has $5 left. It's going to credit his account. The thing that makes this tricky is that now there's a negative $5 credit, and you're left with two things going on. One, you could return the $5. Yeah, could do that. You could keep the $5. Maybe you're never going to invoice them again, and you don't care enough to send them the $5. You just want to keep it. That's another option. Or you could just keep it for later, for another invoice further down the road. If you're just going to keep it and you're going to invoice them again later, you don't need to do anything, because whenever you invoice them the next time, QuickBooks can apply that extra credit later on. So you don't need to do anything about that. The only time that you need to take any action in this case is if you ever want to keep the $5 or send it back to them. So let's talk about those two options. Oh, and by the way, Cheryl wrote in, will a copy of your class be available online to rewatch? Absolutely. You're going to get an email about an hour after this class is over, Cheryl, and it'll have a recording of everything. So you can skip around and do whatever you want to do. We'll also end up posting this to the website and probably cutting it up so that it's a little bit easier to get through as well. You're welcome. And I'm glad you like it enough to want to watch it again. I know we're covering a lot of stuff, right? So you probably want to refresh your memory about some of it. So okay, going back to the $5. So how do we deal with these different situations? Well, the first situation is maybe we want to keep it. I'd like to keep it. Let's keep the $5, right? So it's $5. So the easiest way to keep it is to invoice them. And you're not going to send them an invoice, but when you invoice them, you bring up their balance. So I'm going to put in Bill's Windsurf Shop. The item that I use here is actually going to be the same item we used earlier, the write-offs, and then put in the $5. We're not going to save and send it, just save and close. And so now they have a $0 balance. So basically, you've just created an invoice to bring up that balance, right? And to get rid of that credit. But what if you wanted to return the $5 to them? That's tough. How do we do that? I'm going to go ahead and delete this invoice. This is actually the toughest one of them all. And it's really easy to make a mistake at this point if you want to return that money. A lot of people will think, oh, well, if I return the money, it's either going to be a refund receipt or a credit memo, right? That's probably where they're going to go. The problem is that if you enter a credit memo, it's actually going to lower their balance even more. It's going to lower it down to negative $10. And if you do a refund receipt, it's not going to affect their balance at all. So even though those seem like the right choices, actually neither one of them are. The best choice that you have is to either create an expense or a check, depending upon how you pay them back. If you're paying them back with a check, like a physical check that you can hold in your hands, you would use a check. If you're paying them back with a debit card refund or wiring them the money or something like that, anything other than a check, it'd be an expense, right? So I'm going to say we're going to write them a check for $5. So here's the tough part. We can put in their name. What do we do for the category? It's tempting to put in write-offs, right? Because that's the same account we've been using for all these others. But again, that's another trap. It's another trap. The account that we should actually be using is accounts receivable. It's going to sound crazy. Works. We're going to put in the amount. We've got the payee up there. Fill out the rest of the transaction, make sure that everything is accurate. And now their balance is zero. Why did that work? Well, when we create a check for that $5, that actually creates a fake invoice that sends the money out of our bank account and then brings up the account balance of accounts receivable. And if you don't care how it works, then don't worry about it. It just works. So that's how to do that. Those are all those different little situations. And oh, and you're welcome, Adriana. Your oats. Yay, I'm glad I can go over it later too. Yeah, absolutely. Yeah, you can watch this as many times as you want to. And yeah, hopefully it's been a help.